Corporations are stealing the American dream. 44% of all single-family home purchases over the last 12 months were made by institutional investors, per this article that was sent to me by one of my subscribers in Medium. Then another person sent me this one refuting that number by Logan, who's a masterful real estate economist and frankly just a good dude. I've seen him speak several times. He's amazing. I'm going to be diving into the actual info and data, and we're going to find out if the American dream is alive and well, or will companies own 40%, 4 out of 10 of all the homes in America by 2030, because at 44% per year, that's where we're heading. If you think Congress should enact legislation stopping corporations from buying homes, leave a comment. I'm Mike Perna, local Metro Detroit real estate agent. Call me when you're ready to plan your next home purchase. We have over 3,000 5-star reviews, and I work harder, negotiate better, and provide a smoother transaction than anyone in Metro Detroit per our clients' reviews. So the American dream of owning a home, a yard for the kids, a safe neighborhood, a place to call your own is alive in the hearts of Metro Detroit families. But in 2025, that dream feels both closer and more threatened than ever. Imagine a young couple strolling a tree-lined block in Royal Oak, pointing out charming bungalows and ranches and dreaming of raising children there, yet each for sale sign they see brings up anxiety. Will they get a fair shot at this home, or will a big company swoop in with cash and snatch it away? This is the new reality unfolding across Metro Detroit, all of Metro Detroit. Corporate investors and real estate giants are changing the housing game, rents, and causing prices to soar. And local families are fighting to keep the dream within reach. In this video, we're going to journey through the neighborhoods of Southeast Michigan, from Detroit's historic districts to its bustling suburbs, to uncover how the American dream of homeownership is being challenged and what we can do to reclaim it. We'll hear stories of families navigating bidding wars, explore data on housing trends through 2024, 2025, and what's going to be happening in the future, and spotlight hopeful solutions sprouting up right here in the local Southeast Michigan region. By the end, you'll not only understand what's happening to housing in Metro Detroit, but also feel empowered with ways to protect your community and actually get yourself a home, keeping the American dream alive right here in our hometown. So get comfortable, grab a Faygo or a cup of Detroit roast coffee, and let's dive in. Also, leave a comment if you feel Congress should limit how many homes big corporations are legally allowed to own, if they should be forced to sell the ones that they do have, or hey, leave a comment if you feel like it's a free capitalistic market society. Leave the companies alone. Let them do their thing. I'm using my comment section for this video as an informal poll on what people in Metro Detroit and nationally think. If I get to 100 comments, I'm even going to pack them up and get them out to our local, state, and national representatives. I might just go to their office and present the data to them in person. Okay, so in recent years, a new kind of homeowner has quietly moved into Metro Detroit. Corporations and real estate investment trusts. These are not the friendly neighbors who chat over the fence. They're institutional investors, sometimes, a lot of the time, backed by Wall Street, buying up homes by the dozens to rent out or hold as investments. And here in Metro Detroit, we see echoes of that story on our own streets that we're living in right now. So picture this: a modest 3-bedroom home in Livonia goes up for sale. It's the kind of house a first-time buyer with a young family would love. A backyard for barbecues, the elementary school's down the street. But when offers roll in, one is not from an eager family at all, but from a national investment company offering cash above asking price and no inspection. Sellers are finding that really difficult to refuse. And in Metro Detroit, roughly 1 in 6 homes last year were being snapped up by investors rather than regular buyers who intend to live there. In fact, Metro Detroit saw investors account for about 15.5% of all home purchases at the end of 2024. And while that percentage has fluctuated with market conditions, the influence of these big buyers is undeniable. But what does it mean when a corporation owns the home next door? For one, those homes become rentals instead of owner-occupied. And there's nothing wrong with renting, of course. There are many wonderful neighbors and renters. The concern is scale and motive. So studies show that when large investors own a big chunk of the single-family homes in an area, it can lead to rising rents, higher eviction rates, and poorer upkeep of the properties themselves. And it makes sense. A corporation in another state isn't invested in curb appeal, maintaining the yard, or even using quality materials in large repairs like roof replacement or furnace replacement. They actually go the other way, and they invest the least amount possible. And we've seen cases where houses bought en masse after foreclosure were minimally repaired and then rented out. One Detroit study found that children were twice as likely to suffer from lead poisoning if they lived in an investor-owned home. That's a chilling statistic that shows these these issues literally poison people. Corporate landlords focused on profit may delay critical maintenance, leaving families in dangerous conditions. And let's talk about real estate investment trusts for a moment. These are basically companies that pool money from investors to buy properties, similar to mutual funds, but for real estate. Some real estate investment trusts specialize in owning residential homes and have been actively buying in affordable markets nationwide. Michigan's quirky property tax law, which gives homeowners a tax break but charges about 40% higher rates on taxes for non-owner occupied homes, has somewhat deterred the biggest Wall Street landlords compared to places like Atlanta or Phoenix. In cities like Atlanta, mega investors own a staggering 25% of single-family rentals. Metro Detroit has not hit that extreme yet. But one recent report put out-of-state investor ownership in Metro Detroit climbing past 5%. And it sounds like a low number, but that's 1 in 20 homes and rising. And statewide, corporate buyers have indeed been active, especially in mid-price suburbs where returns on rents are high. As the #1 ranked real estate team by reviews, we're getting calls almost daily by out-of-state companies and investors looking to buy homes right here in Metro Detroit. This has especially heated up after the election, most saying they want to park their cash in real estate because they're afraid of the stock market and they're afraid of the economy. And more than most states, Michigan seems like a bargain to out-of-state investors with cash in hand. Then that translates into heartbreak for local families who keep getting outbid. The result? A growing chunk of our housing is becoming commoditized, treated like a stock portfolio rather than a bundle of memories and community ties. We're already feeling the impact in many neighborhoods. In parts of Southfield and Westland, you might notice more homes for rent than for sale, owned by LLCs with mailing addresses in other states. In Detroit's historically stable Grandmont or Rosedale areas, longtime residents have watched some houses get bought by investor groups. Some are maintained as quality rentals, but others just sit oddly empty or neglected, waiting for values to rise. And every time a home that could have been a starter home for a young family becomes a rental for profit, it slightly shifts the balance of the community. And the stakes are high. Homeownership has long been a path to building wealth for a family and stability. When corporations muscle in, it's not just individual buyers who lose out, but entire neighborhoods can change. Fewer owner occupants means less engagement in local schools or the PTA, fewer volunteers to work block clubs, and that subtle but real difference in the feel of a street when people are putting down roots versus just passing through. As one economist bluntly puts it, institutional investors cause higher home prices and rents, effectively pricing out the very families who have sustained these communities for generations. So is the American dream being stolen by corporations in Metro Detroit? In some ways, it can feel like it, but as we'll see, Metro Detroiters are not handing over the keys without a fight. First, let's examine how tough the housing landscape has become for regular folks in Michigan lately, and why. And if you haven't already, subscribe to the channel. We drop new videos each and every week about local Metro Detroit issues and the cities and communities themselves. Also hit the like button so more people can see this video and up their knowledge. So here we are. Welcome to the Michigan housing market in 2025. It is a wild ride. And if you feel like home prices have jumped and affordable homes are harder to find, you're not imagining it. Over the past decade, Michigan saw home values climb almost 100%. The median home went from $150,000 in 2012 to roughly $298,000 by 2023. And that upward trend didn't stop. By 2025, the median sales price statewide hit about $314,400 and is still climbing. In simpler terms, the house that cost $350,000 a couple years ago may be $500,000 or more right now. For first-time buyers or anyone without big equity or savings, that's a huge jump. And what's driving this? A classic case of low supply and high demand. For years, new home construction in Michigan and nationally has lagged behind the need. We were building only a trickle of the homes after the 2008 recession, with over 70% of builders out of business and hard to build at a profit until home values bounce back enough. In Michigan, state officials even set a goal to create 115,000 new housing units by 2026 to catch up, acknowledging how short on homes we are. But building takes time. Meanwhile, millennials, the largest home buying generation, have hit their home buying stride. And then another ingredient to this housing cocktail is mortgage rates. In early 2022, you can snag a 30-year mortgage around 3%, but by 2023, rates shot up past 6% all the way to 7% as the Federal Reserve tried to fight inflation. As of 2025, rates have hovered around the highest levels in over a decade. That doubled the cost of borrowing money for a home. Many buyers suddenly found the home that they could afford last year was 100% out of reach this year because the monthly payments would be be literally $1,000 higher per month or more due to the interest rates. It's like the floor just moved under their feet. Higher rates normally cool housing markets, as we saw in the early 80s and then the 90s, and indeed 2023 saw sales volume dip, but not because the buyers stopped buying like in the other markets, but because sellers with locked in 2 to 3% rates stopped selling. The result, home prices didn't crash like expected. They actually stayed strong and rose because those who could still afford to buy competed fiercely over the very few homes available. In Metro Detroit, November 2024 delivered a shocker for the real estate community. The median sales price literally jumped 10.3% year over year, one of the biggest leaps in recent history. Wayne County led it with a 13.5% increase, and Detroit City proper saw itself soar 16.7%, dethroning Miami as the fastest appreciating market. So think about that. Detroit, often thought as a low-cost outlier, saw some of the fastest growth as people rushed in to buy in neighborhoods that are revitalizing, yet still relatively affordable. Oakland, Macomb, Livingston, and Washtenaw counties, traditionally pricier, also saw about a 10% increase. So across the board, housing has become less affordable for the average Michigander. But now let's talk about rents, because home ownership and rental markets are two sides of the same coin. If people can't buy, they keep renting, which drives up demand, so prices for rentals, of course, go up. Michigan renters have been feeling that squeeze big time. Between 2023 and 2024, our state had one of the highest rent increases in the country at 12.4% jump in rent prices, the second largest increase nationwide. By 2024, the average monthly rent in Michigan hit roughly $1,805 per month, and for Metro Detroit, it was around $1,970 per month. Now that's a statewide average. In hot areas or for larger family-sized units, many rents are well above $2,500 a month. For context, a rule of thumb is to spend no more than 30% of your income on housing, whether that's rents or your mortgage. To comfortably afford that Metro Detroit rent of $1,970 per month, you'd need to earn about $6,500 a month, around $78,000 per year. But Michigan's median household income is much lower than that, meaning a lot of folks are paying far more than 30% on housing, and that is dangerous territory. Any little thing from an unexpected medical emergency to an expensive car repair could tank a family, literally. Renters from Detroit to Grand Rapids have been saying the rent is too damn high. Activists have actually formed a coalition by that name and have been rallying in Lansing. They share stories of working families facing $200 to $700 rent hikes at lease renewal, seniors on fixed incomes being forced to move, and college grads moving back home because they can't afford to rent an apartment. And remember those corporate buyers? They thrive in tight markets. When regular buyers struggle to afford a home or secure financing, a cash-rich investor can pounce. And in Metro Detroit, the investor share purchases actually cooled a bit when interest rates went up. Some big players pulled back nationwide in 2023, but they roared forward in 2024 because of stock market uncertainty. So by early 2025, Metro Detroit finds itself at a crossroads. We have one of the nation's most dynamic housing markets. Homes are still far cheaper here than in Chicago or New York or on the coasts, and our region's revival is attracting a lot of interest. But that knife cuts both ways. It's exciting if you're a homeowner seeing your equity grow, or if you're a seller getting 10, 12, 20 offers on your property. It's super daunting if you're a house hunter checking listings every morning, only to see them disappear in the afternoon or by the next day. It's heartbreaking when you're a renter watching your dream of buying slip further and further out of reach. In the next sections, we're going to get personal with this struggle. We'll follow the journey of first-time buyers trying to make it and families dealing with the fallout when homes turned into high-price rentals. But stick around, it's not all doom and gloom. We'll also discover some inspiring solutions and even name a few Metro Detroit neighborhoods where the American dream is still alive and kicking, offering hope that all is not lost. So let's meet Jason and Marisol Johnson, a real but renamed couple that just bought a home with us here in 2025. Jason grew up in Livonia, went to Western Michigan University, moved back for work. Marisol grew up in Southgate, also went to Western, where him and Jason met. Now they've been renting a 2-bedroom apartment in Canton and saving for a house for a while. They have good jobs. Jason's a teacher, Marisol's a nurse. They have a toddler and another baby on the way. For the Johnsons, owning a home isn't about an investment or a flip. It's about stability. It's about a backyard for their kids and being near a good school. They spent 2023 and 2024 diligently saving, cutting back on eating out, tucking away every bonus, determined to make their dream a reality. By late 2024, with about $25,000 saved, they started house hunting with a pre-approval for a mortgage up to $450,000. They target Farmington Hills, North Livonia, and West Bloomfield neighborhoods that fit their budget, and their excitement unfortunately quickly turned to frustration. Every house they like gets multiple offers within 24 or 48 hours. They bid on a cozy 4-bedroom in Farmington Hills on the market at $450,000. They offered the full $450,000, even wrote a heartfelt letter to the seller about raising their kids in that family home, and then they got outbid by somebody willing to pay $470,000 in cash. Next, they try for a slightly smaller house in Livonia priced at $410,000. This time the Johnsons go $10,000 over asking, even offer the seller free occupancy so the seller can stay there rent-free for a month. Still no luck. An investor from a local LLC swooped in with no contingencies, not even an inspection. It's like looking for a unicorn, one Detroit buyer said of finding an affordable home, and the Johnsons now understand that feeling. In Metro Detroit's hot housing market, cash is king, and sellers often choose the cash offers or conventional loans with steep 40, 50, or 60% down payments over FHA or VA loans because they fear delays, appraisal issues, or frankly, the deal just not closing. Many first-timers like the Johnsons only qualify for FHA, which has stricter appraisal rules, putting them at a disadvantage. Sellers rank their offers typically cash first, then a buyer with 20% plus down conventional, then lastly FHA, even if FHA is the only path for many young families. It's disheartening. They also face the vicious cycle of renting versus saving. As mentioned, rents are high. The Johnsons are paying $2,100 a month in rent. With each failed offer, they lose precious time and morale. How are we supposed to compete with companies that have millions, Marisol wonders, after losing a home to an out-of-state investor? They're not alone. Across Metro Detroit, first-time homebuyers in 2025 are facing an uphill battle. One report from WDET shows that only those with the most experience and money are closing on houses, and that's usually people who have owned before or investors. Now, millennials entering the market often find themselves bidding against not just each other, but sometimes their own landlords or flippers who come in all cash. In the end, the Johnsons did find their homes and the seller willing to sell it to them. It took a combination of us door knocking specific neighborhoods, calling, mailing letters on their behalf to find an off-market property no one else knew was coming to market, and that's what it takes in 2025. The silver lining for families like the Johnsons is there are opportunities out there if they connect with the right agent willing to roll up their sleeves and actually do the work. In 2021, competition was fierce, but there were so many homes coming up, realtors could literally just sit back and wait for the homes to go live. Today, we gotta work for it. If the Johnson story resonates with you, the first question you should ask when you're interviewing an agent, and yes, actually sit down and interview an agent before seeing a home, because today, you gotta sign a contract obligating yourself to that agent before seeing any home, is what will you do for me to find a home off market without competition? Another challenge, down payments and credit. The Johnsons were fortunate to save $25,000, but many renters struggle to accumulate savings while paying high rent. If their credit score isn't perfect, that pre-approval letter might come in smaller or the interest rate higher. Now, Michigan does have a couple programs to help, but most first-time buyers don't even know about them until they're deep into the process. So the human side of this is stressful. Kara, another one of our first-time buyers, talks about how every night she scrolls listings past midnight sometimes on the Zillow doom scroll, hoping to catch late posted new listings that she can look at first thing in the morning and be the first to view. She half jokes that searching Zillow has become her second job, but she's only half joking. It's exhausting and can put a strain on a relationship. Many couples have had to have tough conversations. Do we increase our budget and stretch our finances? Do we settle for a house that's smaller or in worse condition? Or do we wait and hope the market cools? None of these choices are easy. And what about those who do manage to buy? Well, they've likely had to compromise or push themselves financially. It's not uncommon now for first-time buyers to spend well above that recommended 30% of income on housing just to win a home. They bet on future raises or cuts in other spending, but that leaves them vulnerable. If anything goes wrong, like a job loss or a need for an expensive repair, housing insecurity isn't just being homeless or renting. Even new homeowners can feel financially insecure if they had to overextend to get in the game. Another family, the Wallaces, who have a lower down payment and spotty credit, we connected with the MISHDA program, the Michigan State Housing Development Authority, that offers down payment assistance up to $10,000 in certain areas, which could make their offer more competitive if they could put a bit more down. And with that program, we were able to make our offers, again, much more competitive, and we were able to secure a home for them. They also had to have that tough conversation on the three things that they wanted to either hold or bend on. And those three things are price, condition, location. So the Wallaces expanded their search radius, changing location, and started looking at homes that needed some TLC, so that's condition, and considered using a 203K renovation loan that we got quoted out for them. Mr. Wallace said, I'm gonna fight for this. This is gonna be our family home. I'm gonna raise my kids here. That's what we're talking about. So that determination is something we see a lot in Metro Detroiters, a resilience and a creativity when faced with challenges. In the end, they found a great home in Royal Oak. It didn't have the finished basement that they wanted. It also didn't have the 2-car garage they wanted. It had a 1-car garage. But in the end, they bended on condition, but kept their price and budget and location where they wanted. But while many young families battle to buy homes, there's another battle being fought by those who are already renters in corporate-owned properties. So let's switch perspective to see what it's like for a family renting in a neighborhood that's turning into an investor haven and how that affects community life. Say hello to Angela Williams. This is a single mother of 2 living in a 3-bedroom rental house in Warren. She's been in this home for about 5 years, and her kids are thriving at the local elementary school. The neighborhood is a mix of owner-occupied homes and rentals. Over the last couple of years, Angela has started to notice a subtle change. A few of her longtime neighbors, homeowners that she was friendly with, started to sell their homes, and in each case to a rental company. Some of them didn't even go on the open market. The owners got direct cash offers and decided to take the cash and either move to warmer climates or downsize or just move out of the area in general. Suddenly, Angela had new neighbors, or sometimes no neighbors. One home sat empty for months before the company found a tenant. Another was used as a rental, but the tenants were different every year, a far cry from the retired couple who had lived there for decades before and really cared about the home in the neighborhood. So the churn has effects on the social fabric in any community. Angela used to have Mrs. Thompson next door who'd watch her kids in a pinch and bring over cookies. Now that house is an Airbnb managed by a company. On weekends, she sees strangers with suitcases coming and going. Across the street, the Smiths sold to an investor, and now a property management company handles the rental. The young family renting there is nice, but Angela hesitates on getting too close, knowing they might move when the lease is up. They already mentioned the rent might jump, so they're not sure they can even renew the lease. The informal support network in that neighborhood has definitely frayed a bit. So school continuity is affected too. Angela's older kid mentions that 3 of her friends from class had to transfer because their families moved when rents increased. It's not fair, one local renter said. It causes people to move out of the communities where they've lived for a long time, like years or decades. And if my rent continues to go up, I won't be able to afford to live in my community. Those words resonate deeply with Angela. Her landlord, which is a large rental corporation, recently notified her that her lease, being up in a few months, will be renewed at a higher rate. She's bracing herself for how much? Perhaps a 10, 20, or 30% hike in rents, like many Michigan renters saw. If it's too high, she might have to relocate, which means she'd have to pull her kids from their school, and that's a disruption none of them want. This is a scenario playing out for countless Metro Detroit families. Do you absorb a painful rent hike, cut other expenses, maybe take on extra work to stay, or do you leave the community you call home? There's also the issue of accountability and quality. Smaller mom and pop landlords often know their tenants personally and might be more lenient and much more responsive. With corporate owners, everything's via a portal or a call center. So Angela had a plumbing leak last year, and it took multiple calls and 2 weeks for the management company to send out a contractor. Whereas her previous landlord, a local guy, would have been over himself same day or next day. So this is a common gripe: maintenance delays or cost cutting on repairs affecting renters' quality of life. In worst cases, investors do the bare minimum fixes to get a place occupied and ignore slow burn issues like old furnaces or poor insulation, which could mean higher utility bills for the tenant and frankly less comfort, things that don't matter to landlords. On a larger scale, community cohesion suffers when houses become assets. Homeowners tend to participate more in local elections, attend city council meetings, and advocate for neighborhood improvements, partially because they have a long-term stake, their property value, their permanence, in that neighborhood. Renters can be just as community-minded, but they're usually not. They don't invest the time in a neighborhood group or even keep up the garden half as much as an owner-occupant does. When half the block is rentals with high turnover, it's harder to organize block parties, neighborhood watch, or charity drives. The feel of the community shifts. It's a little less tight-knit, a little more transient. And we should note that not all rentals are bad for communities, far from it. Many renters are wonderful neighbors, and many landlords, even corporate ones, do keep properties in good shape and stable. But scale matters. If one or two homes on the block are rentals, they tend to blend into a mostly owner-occupied vibe. If half or more on that block are rentals, the vibe changes completely. A report analyzing census tract data found that in some hard-hitting areas, investors owned a third or even half of all single-family homes, and that's significant. In those places, the majority of neighbors are tenants who might not be around in a year, and the absentee landlord phenomenon can creep in. The Williams family situation underscores why housing isn't just an economic issue, it's a community and a human issue. When we talk about the American dream, it's not just owning a physical house, it's the sense of belonging somewhere, investing in your future and your neighborhood's future. Corporate ownership, rising rents, and forced moves directly threaten that sense of stability and belonging. But Detroiters and Michiganders are not passive players in this story. Across the region, people are organizing, innovating, and pushing back to protect their communities and keep housing attainable. It's time to shine a light on these hopeful trends and solutions that show the American dream might bend, but it is not broken. Despite all the challenges, there's a lot of hopeful action in Metro Detroit. Our communities are coming up with creative ways to push back against the purely profit-driven housing companies and to keep homes available for regular people. We're going to explore some exciting efforts and ideas that are blossoming right here. Number one, community land trusts. Permanent affordability. In Detroit, a group of nonprofits and neighbors have embraced a truly unique model called community land trusts, CLTs. A CLT is basically where a nonprofit owns the land and then the residents own the homes on that land with the agreements to keep the homes affordable long term. It's a way to take housing out of the speculative market so it can't be easily flipped or snatched by corporations. As of 2024, 5 neighborhood organizations from the North End to Highland Park are working with the Detroit Justice Center to start community land trusts. They plan to acquire vacant lots or houses, mainly from the Detroit Land Bank, and create permanently affordable houses on them. For example, the North Corktown Community Association has already secured 9 parcels for their CLT with support from local foundations like Ford's nonprofit arm. These trusts will lease land to families for a nominal fee, I'm talking $50 a month, and sell or rent the homes at below market value prices. If a family member later sells, the resale price is limited so the home stays affordable for the next family. It's a great concept. The community, not distant investors, control the land. While CLTs are just starting here, the fact that Detroit has 3 of them being worked on right now in 2025 shows a real commitment to innovative solutions. Number 2, cooperative housing and co-ownership. So Michigan has a history of housing cooperatives, especially for seniors. In fact, one example of that are new co-op apartments that opened in 2024, like the Dunn Family Senior Co-op in Clinton Township, that makes rents affordable for older residents with owner-only and 55+ requirements. The cooperative model, where residents collectively own the building and operate it democratically, can be extended to other groups too. In Ann Arbor and other cities, student housing co-ops have thrived for years, and some folks are looking at co-op living for families. For an example, a group of friends might jointly purchase a multi-unit property, each owning one share or one unit, rather than trying to buy separate single-family homes. This can lower the cost and the risks by pooling resources. There's also an idea floating around of co-buying, like a 2-unit duplex. One family buys one unit, the other family buys the other, sharing the land and some of the cost, effectively buddying up to beat the investors. And it might sound unconventional, but these are the kinds of strategies people are considering to unlock home ownership in a tight market. Number 3 is policy changes, turning the tide on that. At the policy level, Michigan leaders have woken up to the housing crunch. In late 2024, a bipartisan push called the Michigan Housing Forward Act looked to reform zoning laws to allow more homes to be built. Some of the proposed changes are letting cities permit duplexes in single-family zones, reducing excessive parking requirements that make building new apartments or townhomes overly costly, and make development approvals simpler and faster. The idea is to encourage more diverse housing, not just expensive single-family homes, but also townhomes, low-rise apartments that first-time buyers or moderate-income families can afford. While these bills are still being debated even today, the momentum is there. Even the Michigan Association of Realtors and affordable housing advocates found some common ground, knowing that more supply could ease competition and prices. Detroit on its own has also looked at ideas like vacant property tax to discourage speculators from leaving homes empty, and a land value tax that could push landowners to actually develop vacant lots or sell them to somebody that will instead of just sitting there. And then there's the Detroit Land Bank Authority itself, which despite past criticism has shifted strategy to get homes into the hands of owner occupants, not so much investors. Programs like Own It Now let people bid online for vacant homes, often under $20,000, with a pledge to fix them up. Additionally, the Land Bank Side Lot program allows existing homeowners to buy the empty lot next door for $100, preventing developers from grabbing it and letting the neighbor expand their yard. Thousands of Detroiters have done this, subtly ensuring the land remains locally controlled. Number 4. Financial help and education. So Michigan offers pretty robust assistance for first-time homebuyers. The MSHDA loans we mentioned gives a $7,500 statewide or up to $10,000 in certain areas cash down payment assistance. And Detroit has additional programs stacking on top of that. At one point, Detroit was offering up to $25,000 in grants for home buyers in the city. These grants and deferred loans can mean the difference between being able to buy or not. For instance, if Marisol and Jason, our earlier couple, targeted a house in Detroit in a certain zip code, they could leverage the 10 grand assistance, which might make their FHA offer more appealing because it's more down payment, and keep their loan smaller. The key is awareness. Organizations like Detroit Home Connect and neighborhood nonprofit housing counselors are spreading the word. Homebuyer education classes are required for these programs and are helping folks learn how to navigate bidding wars, how to use escalation clauses, or how to improve credit scores to qualify for a better loan. Knowledge is power, and Metro Detroit has a network of housing counseling agencies like the Southwest Solutions or Green Path guiding families through the process. We even see innovative ideas like crowdfunding to buy back a block. In one Detroit case, a group of former residents pooled their money together to purchase a couple homes on the block they grew up, and specifically to keep them affordable for families. This might be small scale now, but they're also proof of concept that communities can take control of their destiny. All these efforts, from policy down to individual actions, are like small lights in the dark in this housing crisis. They show that we are not powerless. Yes, huge market forces are at play, but local initiatives and smart strategies can carve out spaces where regular people have an edge. Okay, let's zero in on something useful for those of you guys watching. Where can Metro Detroiters still find that attainable American dream? So as we wrap up our deep dive, let's step back and breathe in the bigger picture. Metro Detroit in 2025 is a tapestry of contrasts. New developments are glittering in the downtown skyline, while century-old homes are getting new leases on life in neighborhoods. Families anxiously bidding on houses, while others celebrate finally getting keys. Communities worrying about corporate buyers, even as they devise plans to beat them at their own game. The American dream of homeownership, our American dream, has been tested in these times, but is far from stolen. And in fact, if there's one thing that we've learned, it's that the dream is resilient. It lives in the hearts of people like the Johnsons, who refuse to give up on finding a home for their growing family. It lives in activists like Tanisa and Vanetta, rallying in Lansing to shout, "The rent is too damn high," demanding justice for renters. And to the people of Metro Detroit, your voice matters in this, whether you're a homeowner worried about your kids being able to buy someday, or a renter worried about next month's rent, or a civic leader trying to find balance and growth with equality. Stay engaged, share this information, have these conversations, and support one another. The more that we treat housing as a shared concern, the more we can create solutions that work for everyone, not just a few people and not for the corporate greed. Imagine a future scene. It's 2030, a summer block party on the street in Novi, Michigan. The air smells like barbecue and there's sounds of laughter of children. And on that block, you've got retirees that have lived there for 50 years, young couples who just bought and put personal touches like a new kitchen or bathroom in, a few renters who are saving to buy in the neighborhood. And yes, maybe one of those homes is owned by a rental company, but the tenants there are at the block party too, feeling just as much a part of the community as anybody else. The housing talk isn't about fear or frustration anymore, but it's about pride. Pride that this community took charge of its own destiny. And that is the Metro Detroit that we're working towards. One where the American dream is shared, not stolen. Thank you for watching and caring about this vital issue. If you found this video helpful or inspiring, please give it a thumbs up, subscribe to the channel, and share it with others. Awareness is the first step towards change. Drop a comment with your own experience or tips. Have you faced challenges buying a home, or do you know of a great program for helping people? Let's get this conversation going. And as always, stay tuned for more local insights as we continue exploring Southeast Michigan, championing our communities, and keeping it real about the issues that matter. Together, we can ensure that Metro Detroit remains not just a place on a map, but a home in the truest sense for all of those who dream for a better life here. Let's keep the American dream alive, right here at home.